All right, just checking to make sure this is working out here now. That the audio's good. All right, just checking to make sure this is working out here now. It's good, it's good. All right. Put this to the side. We got it up. Gonna have to turn this down a little bit. There we go. Got it on YouTube. We've got it on Twitter. So it looks like the stream is officially working despite some delay. I wanted to start looking at the coin market cap data here to begin. You know, I don't know if you guys use coin market cap, but it is a fairly helpful tool that we have. And let me drop a link here for some people just in case anyone wants to jump in and join. We want them to be able to do so. So let's just get those dropped in here. Stream live. There we go. We'll do it on YouTube, and then obviously we will post it here on Twitter. Get all the folks going. Talking all things crypto, memes, and money. We'll be live for about an hour. Jump in. When will this cycle end? There we go. All right, we're live. So I'm going to start out looking a little bit. I do want to talk about the cycles. I obviously do want to talk about the cycles. I think that is an important place to start always for what we're doing when it comes to investing, when it comes to crypto. The cycles really have ruled us for a long time. And from my point of view, until we actually see a deviation from those cycles, we're most likely going to be following those cycles, continuing to follow those cycles. Now, I started this by opening up CoinMarketCap because I did want to talk, if you use CoinMarketCap, there's this really handy thing that you can do. There's a lot of different categories that you can browse. And if you go to memes, if you're into memes, you can come to memes. You could check out really what is going on. And you could look at it, by chain. So if you're looking for Ethereum memes, I do this all the time. If you're looking for Ethereum memes and seeing like, well, what's pumping, what's going on, what's working, what's not, what's on the up and up, you can come here. You could look at Ethereum. You could look at meme categories, cat theme, politify, AI memes, AI agents, things like that. And that is a good way to really see what is pumping in a very easy, user-friendly way. Artemis actually has something similar, and we'll get to Artemis in a second. I'll see if I can't dig it up, but they do have something similar. So if I come here and I'm looking at Ethereum, you could just look, what's been going on. Have Ethereum memes been pumping? There's a lot of green here, but what has been pumping the most? Look, you see some very famous names. You got Shib, got Pepe, basically flat. You got Bonk, essentially flat. There's a lot of flat sideways action happening here. One of the people in our trading group in Telegram, t.me/SokaSignals, is in on MogCoin. Crypto the Kid was talking about MogCoin the other day. And, excuse me, I don't have his analysis up in front of me, but he was talking about Mog being a project that you might consider getting in at sub 500 mil. So that's definitely an interesting play. I've liked ApeCoin. I do like Ape here. I think that's an interesting play. So there's a few here on Ethereum that you can really start to look at. You got Bobo down here, which of course, has a lot of volatility, has a lot of movement. Landwolf 067 always is looking for some love. What was it? What was the 067's peak? I want to see what its peak was. Let's go over the course of a year. Let's get a market cap. Look at that. God, 200 mil. Look at this shooting up here. Just massive run. So hopefully we can get back to that. But the Wojak universe has been popping off. But Wojak itself has been pretty flat here as well over the last 7 days. Let's load that up. Going from around 22 to around 25. It looks like there's still opportunities on ETH. And again, if you want to come up here and you wanted to look at a chain like Solana, we can see what's moving on Solana. Solana a little bit more volatile, but you wouldn't know it from some of these coins. I think that this is going to be the Mog on Sol. It might even just be the bridge straight across. Yeah, this is the wormhole. You got Fartcoin here. And, you know, if you go back and look at the Fear and Greed Index, you're going to be looking right around 54. It is not necessarily altcoin season yet. We know that. You know, up here, we've had Bitcoin really popping off. So these are just great things to look at. These are just great things to really look at. And again, it's not going to be like your whole trading strategy, but this is going to be able to round out stuff that you're really looking into. And, you know, I think that it can really separate some people when they are trying to make decisions based on what we're going to be talking about today, which is what is going on with the cycle. Where are we going to end up? Where shall we be? That's the question. That's the question that is hot on everyone's mind. Because if you can get that right better than your peers, then you're going to be able to make some money in a significant way. So that's how you could kind of check out crypto CoinMarketCap. It really does give you a good view of the overall market. We'll play around with some Artemis flows maybe another day. I'm not really dying to get into a huge technical discussion on that. I just wanted to kind of check out some of the stuff that's going on here. Speaking of technical discussion, actually, this is something that I wanted to look at here. Cointelegraph obviously has some great information and some great articles written, you know, consistently as it pertains to the crypto market. Bitcoin sees Bollinger Band's head fake with 117K bulls next target. So I did want to look at that and read that together and see what they're kind of talking about. So Bitcoin bulls keep momentum intact at the Wall Street Open with 117K and higher on the radar. Hold on, sorry, I'm going to get spammed if I don't close that out. So for those who don't know, Bollinger Bands are just essentially a way to, you know, view transactions just like any TA. All TA is trying to do is to tell you whether or not a asset or asset class or whatever you're tracking is going to go higher or lower. And I'm going to be doing a class together with everyone on trading here. We're going to do the Crypto Banter Whale School together. Crypto Banter was kind enough to give us a entry, you know, for free, and you can get it too. I have an affiliate code with them, or sorry, I'm going to use an affiliate code for them. It's not going to be mine, so the money will go to them. But I think that that's very fair, considering they're giving a course that costs quite a bit of money to us for free. And I think that that's something cool that we're going to be able to do together. But essentially, all you're trying to do is identify where the market is going, understand the market psychology. And so some of this stuff here, for example, liquidation heat maps, we're really hovering in between this 117, 115 range. Like there's no real liquidations. And so you could easily see it bouncing around here. And that's why we've been getting some of the sideways action. And so here you go. Here we have our hero of the title, Bollinger Bands track fake Bitcoin price breakdown. Price action nonetheless conformed to prescribed levels, highlighted on the Bollinger Bands volatility index. So look at this. You get this nice bump up here. On an hourly time frames, price rejected an upper band, while the daily chart delivered what creator John Bollinger described as a head fake. Price dipped below the lower band before reversing, rejecting a breakdown in a similar style to previous swing lows in 25. Bitcoin and a number of other cryptos are setting up a head fake after Bollinger Band squeeze. Interestingly, the pattern is not evident in the ETFs as they don't trade on weekends or holidays, Bollinger noted. So this is when they're talking about a head fake, they're saying, you know, look, we dipped below this green. Let's see if I can see it here. No, I can't see it here. This is what they're talking about, though. Oh, yeah, that didn't zoom at all. This green line is that support line, and it broke that support, so it made it look like it was going to be going lower, but it was able to bounce up. So that's what it's talking about when it's talking about a head fake, which I think is interesting. I think that all the TA that I am seeing is fairly bullish overall. Interestingly enough, ton at 333 is fairly bullish overall for Bitcoin. So that's a good one to kind of check out. I don't see too much more going on Cointelegraph today, but you know, I do want to go over now. There was a YouTube video that caught my eye that I want us to check out. So we'll watch this together. This is Michael Saylor talking about single-handedly supercharging Bitcoin into the super cycle. So we're going to see it. We're going to check it out because the topic of the day is, will the super cycle continue? What are people saying? What does the data suggest? And we're going to obviously be able to answer that here at the end of the hour. So we're going to play this without further ado.
What if you think Bitcoin's as good as the S&P? If Bitcoin goes up 10% a year, even if it stays volatile at 40 vol, every one of these instruments is investment grade or investment grade equivalent, by our BTC model. You think that Bitcoin's going up 20% a year, you can see the risk just drops away, and now you've got credit spreads, 0 basis points, 5, 8.
So for context, this is Michael Saylor. He's talking about his STRC launch. STRC, I did a video about it. It is a instrument that is backed by MicroStrategy's Bitcoin reserves, and it attempts to try to generate a 9% yearly average. And so what he's talking about here is, if you believe that Bitcoin is going to grow, that all of these assets that they've created, these financial instruments that they've created under the MicroStrategy banner, backed by MicroStrategy's reserves, actually have very low risk. And the way that they are able to guarantee certain levels of returns, so STRC, like I said, I believe is 9% a year, is that they have these massive Bitcoin reserves, and they believe that, of course, they're going to be going up over time, even if there's a little bit of a dip. I think that they have something like 8 or 9 times the total reserves that would be necessary at the raise. They raised 2 million or something like that. You can see here's the Bitcoin credit, 8 bips. So maybe it's 8%.
9, 14 basis points. Anybody in the world running fixed income that wants fixed income, that has a positive view toward Bitcoin, looking at this model, will see that these are all really compelling instruments. Now, what happens if you're a maximalist? If you're a maximalist, you can see the BTC risk drops a basis points, the credit spreads go to nothing. The spread premiums blow out. Is the world got a lot of maximalists? Yeah.
Michael Saylor has done it again, only that this time, the stakes are much higher. The relentless rise of Bitcoin is now colliding head-on with the world of corporate finance. And at the center of this storm, MicroStrategy, a company that's thrown out the old rulebook and gone all in on Bitcoin. In the second quarter of 2025, the numbers were historic. But behind the paper gains lies a brewing storm of risk, skepticism, and one of the boldest financial experiments Wall Street has ever seen.
So part of the reason why I wanted to watch this video together when we're talking about the super cycle and will it last, will it exist, is the bull case for a super cycle really leans into the idea that institutions, companies, nation states, etc., they are stacking Bitcoin in a way that we've never seen before, which is absolutely true. And one of the leading people in this is obviously Michael Saylor and MicroStrategy. If MicroStrategy is able to wrap these traditional financial instruments around Bitcoin, that will extend the cycle and take some of the peaks and valleys that we're used to and really smooth those out. So to the extent that we do see a super cycle that breaks our traditional cycle model, it will, if you think of it like I wish I could share this here. I'll try to share it. I'll try to draw it in a second. But if you think of it like a curve, it's really going to flatten the curve a little bit and extend it out. It's going to kind of smush it down if you think of it like Play-Doh. So I'll figure out a way to draw that for you guys. But let's watch this a little bit. That is why we're talking about the cycle and understanding what's going to happen.
MicroStrategy isn't just holding Bitcoin; it's building an entire financial empire on top of it. While most companies treat Bitcoin as a speculative asset, Saylor treats it as digital bedrock, a volatile, unpredictable digital currency that doesn't generate cash flow, yet now powers a multi-billion-dollar public company. To most traditional investors, that's a red flag. But to Saylor, it's the future. Now, the second quarter of 2025 marked a turning point. MicroStrategy raised a staggering $18.3 billion in capital in just the first 7 months of the year. That's 81% of all U.S. preferred equity raised in 2024, a figure that's almost hard.
I mean, this is insane. This is insane to even, they're about to say this is a figure that's even hard to understand. Real quick, I'm trying to get Paint to work, but it does not appear that it wants to, and I'm not sure why that is. So let's see here if we can get this to work. Hold, please. Customer service. Soka is in the building. Yeah, this is not window title must match. Match title, otherwise find same type. Yeah, that's what we want. How come you don't show any paints? How come it's black? What is going on? There you go. When you're doing this live, you guys, this is sometimes what happens until we get a producer. If you know a producer, that's what we're looking for. Here we go. I'm gonna get this to work. You guys will see. This is gonna be a feat of human achievement right here. You just wait. So why won't paint show up? All right. Well, maybe we don't get it. It shows like something happening. Look, it's got my cursor there. We'll definitely edit this part of it out. But I'm going to go backwards here. Okay, paint doesn't work. That's fine. That's fine. You guys are just going to have to imagine some Play-Doh getting squished down. If we have the Supercycle, that's what it's going to look like. It's going to be a little bit longer, and it's going to be a little bit flatter. That's really what's going to happen. So I want to go back just a little bit, though, while I was messing with that. They said some extremely important stuff.
25 marked a turning point. MicroStrategy raised a staggering $18.3 billion in capital in just the first 7 months of the year. That's 81% of all U.S. preferred equity raised in 2024, a figure that's almost hard to believe.
Okay, let's repeat that. I'm actually going to go make a tweet about this right now. MicroStrategy raised 81% of 2024's total in just 7 months. That is bananas. That is insane. Let's get a tweet out there. Let's do it, boys and girls. Let's get the tweet. We'll keep watching.
4 new credit products were launched: STRF, STRK, STRD, and STRC. The last one, STRC, became the largest IPO in America this year. The financials? Absolutely jaw-dropping. GAAP operating income hit $14 billion. Net income, $10 billion. EPS soared to $32.60, possibly the highest in the S&P 500. Now, this isn't just a result of smart management. It's the direct impact of Bitcoin's price surge and a new fair value accounting method. So the big question now is, could MicroStrategy's radical model become the blueprint for a new era of corporate treasury strategy, or will it trigger the next speculative bubble? Let's watch more clips from Michael Saylors and hear what he has to say on this. Please don't forget to like, subscribe, and enable notifications for more in-depth content. Thanks for joining us again. Enjoy the rest of the video.
The analysts are all starting to cover and track Bitcoin, and they have outlooks for Bitcoin. So if you're going to cover the 160 Bitcoin companies that have Bitcoin on their balance sheet, you're going to have to form an opinion about Bitcoin. And so you can see that the average end of the year price forecast of an equity analyst covering MSTR is 168,000. And so keep that in mind, 168,000 by the end of the year. That's the consensus of the analyst community that tracks our stock right now. Technology investors are looking for the next great thing, and everybody, the consensus trade is AI. Everybody knows AI is the next thing, but now they're starting to realize that Bitcoin is also the next thing. And
I think we're hitting a wall with what we can do. We're trying to get this tweet out.
It's being lumped as a technology transformation and a digital disruption. This is really positive because this is going to draw.
I'll try and pause this here. I'm trying to get this tweet here, but it's not working. Mainly because Twitter. This is definitely not an internet issue. We have excellent connection. We're dropping no frames at all. So let's see what happens here. Hold on, hold please. Not sure where the jam is at. 81% of 2024's total. right, there we go.
Draw
All right, we
lots
got
of
that tweet out.
Magnificent Seven investors into our
Check it out.
space. Financial regulators are embracing.
Where'd it go? All right, I think it just glitched on us. Hold on, we're gonna get it back. Let me see this thing here. Go. I'll pull it back up. One moment. One moment here. I don't know what happened. It just bugged out, dude. The psyop is real. Let's get to a history here and let's see if we can't find the actual Supercycle. There we go.
Embracing Bitcoin. You see a new positive Bitcoin announcement just about every other day now.
Oh, we got it back.
From all parts of the government. Just a few days ago, the SEC released a memo allowing in-kind creation and redemption of Bitcoin ETFs. This is a huge deal. This is going to accelerate the development of the industry. Now I'd like to talk about our financial products and our business. As you can see here on this slide, our company's strategy sits between the crypto economy and the traditional finance economy. So the primary asset and the foundation of the crypto economy is Bitcoin, which is worth $2.3 trillion. And when I think about the crypto economy, I think about every country on earth and every capitalist on earth, 24/7, 365, acting rationally in whatever their economic interest is. That's being manifested on Saturday night, and that's creating extraordinary performance and extraordinary demand to the underlying collateral, which is BTC. However, most of the
So if you want to like take a look at this, I know there's been some technical difficulties, but we now are here again. Once we get a producer, we will be doing a great. But we did get a good tweet out about what MicroStrategy is doing. But you can see that the foundation of everything, it's not just when we talk about crypto and the cycles, like we look at it from such a small perspective, honestly, but look at what Bitcoin unlocks. Look at what it allows MicroStrategy to do. This is a great chart. You have Bitcoin, a $2.3 trillion asset, $60 to $70 billion in average trading volume. And MicroStrategy, then it allows, you have higher volatility and leverage, MicroStrategy options, you have ETFs, MicroStrategy, IBIT, and then it has the 4 financial instruments here. God, they have 3% of the supply of Bitcoin. Lower volatility, STRC being the newest one. These are the 4 financial instruments that they created: STRK, STRF, STRD, and STRC, and the market value of those. So look at what it allows. When you're talking about raising, it reminds me a little bit about what Yuga Labs was able to do during the NFT craze. Yuga Labs was able to just extremely high margin products. They launched collections. They obviously had Bored Apes, they had Mutant Apes, they had God, what were the other ones that they had? They had launches that basically just immediately raised hundreds of millions of dollars for them. And that's what MicroStrategy's really been able to unlock, wielding this massive cudgel in the crypto space.
World is unable to access the crypto economy. And so what we're doing is refining, and we're harnessing the power of the Bitcoin asset, and we're able to actually refine it into low volatility, low leverage, less risky financial products, and then higher volatility, higher leverage financial products. So just like you might refine a barrel of crude oil into kerosene, which would be very, very pure, and asphalt, which is not so much, we're basically providing a function that, say, an ETF cannot provide. You can see IBIT, the most famous example here in this chart. It basically wraps Bitcoin in it, and it serves up a security flavor of raw Bitcoin to the investment community. We, on the other hand, are offering stepped down elements: convertible bonds, convertible preferred stock, senior fixed stock, junior high yield preferred stock, and of course this treasury preferred stock in the form of stretch. We're offering those, and those in essence, we're stripping and modifying the duration of the asset, and we're also stepping down the volatility of the asset, and we're actually extracting the yield from the.
So this is something to understand. Again, he's doing something really cool here, and this is exactly why the super cycle may very well continue into the next level, right? If you think about it like a business, if you think about this like a business, you're going to have different product offerings for different people. In traditional finance, they have this all over the place. Even if you've ever had a 401k and you have some of these financial instruments that are target funds, you'll have target funds that are, I am retiring in 10 years. I am retiring in 20 years. I'm retiring in 50 years. And those target funds will kind of balance and rebalance themselves based on what is packaged within those target funds to fit your needs and your goals. And your goals, of course, are you can be a little bit riskier early on in your career, and you need to be a little bit less risky a little bit later on in your career, right? And so look at all the instruments that they have going from very high risk to very low risk. STRC is just straight up a very low risk, low volatility product that is going to pump out 9% a year backed by this massive reserve of Bitcoin. When you think about a super cycle continuing, it's going to be because more and more people are going to be able to consume Bitcoin assets, whether they're derivative assets or whether they're actual raw Bitcoin assets. They're going to be able to do that in a variety of ways. And this is just MicroStrategy's Bitcoin derivatives, right? We're going to have a lot more that come out of this, and it's all going to be backed by Bitcoin. So there is going to be a rush and a race to Bitcoin.
And we're also stepping down the volatility of the asset, and we're actually
sorry. I actually want to make one more point. He just said it perfect.
We're also stepping down the volatility of the asset.
Stepping down the volatility of the asset. Stepping down the volatility of the asset. Again, if I had paint working, I would draw you a nice, beautiful picture. But essentially what that does is it takes that crypto cycle that we know, the 4-year cycles that we know really well, and it's tough to go from 70,000 down to 11,000 in this world where they're tamping down that volatility. They are squishing the outcomes, and they're squishing those so that this curve that had, we saw peaks, we saw euphoria last cycle. It's going to take those and it's going to stretch it out. It's going to spaghettify it like it's going into a black hole, and it's going to make the overall cycle much longer, but the overall volatility as well will be much less. That's what my
and we're actually extracting the yield from the asset, which is Bitcoin, and we're serving it to each of these fixed income investors. But the excess yield, excess volatility, excess performance that does not go in those fixed income instruments goes into the MSTR common stock. And then, of course, that feeds to the MSTR-based ETFs and the MSTR options. So all of these are different instruments. They're all targeted at a different type of investor. They're all some of them offer yield, some of them offer return. So
this is exactly what I was saying. I haven't watched this video yet. I wanted to watch it together, but that's what he's saying. All of these are targeting a different type, a different demographic with different investment goals and investment strategies.
Delve into them a little bit closer. First, Strike, STRK. Strike is structured Bitcoin. So some people, they don't want high
boomers
return Bitcoin. What they want is something with less downside, less risk, less volatility, more certainty. So how do I actually keep the growth but get some yield certainty, strip some of the risk? And the way to do it is with a convertible preferred stock. If we look at the spec sheet here, what you can see is that In essence, at $100, a share of Strike offers about $40 worth of equity. So it's like at that level, it's a 40 delta, 35 to 40 delta instrument. So you're getting partial upside on MSTR. You're getting
What is with these AI generated? Like, we don't need that. Just keep
a
up this while you're
guaranteed
talking about it.
8% dividend, and you're getting a liquidation preference and seniority in the capital structure. So less volatility, less downside, you know,
I will say these instruments that they keep creating for based off of MicroStrategy's Bitcoin war chest, a lot of them have preferred status over the common stock and the ordinary stock. Very interesting.
articulated yield, you know, that you can count on, but you can still keep some of the growth. What's the market universe for that product? Well, you have growth investors, right? The S&P 500, they've got 9% year-to-date performance, and they've got 1.3% yield. Well, Strike is 7.5% yield effectively, and it's 34% year-to-date performance. So maybe the S&P index buyer, maybe a NASDAQ 100 index buyer. Between the two of them, there's about $55 trillion in that bucket. Then you've got commercial real estate, people that want some yield, but they also want some growth over time. That's another very large bucket, $30 trillion. Then you have hedge funds that give you downside protection. They may or may not give you performance. Oftentimes they don't outperform the S&P, but they purport to be hedges, and people like the idea of some structured investment, and that's what hedge funds do. And then
note the effective yield that he's talking about. Effective yield on S&P, NASDAQ, commercial real estate. We're talking sub 5%. Bitcoin 20%.
Another target audience is just Bitcoin investors. Maybe someone that doesn't want 55 vol, 55% performance. What they want is they want some guaranteed yield, some downside protection, but they still want to keep some of the upside of Bitcoin. And then that also goes for spot ETFs of Bitcoin.
Here's where Saylor took things to another level. He introduced a new valuation metric called Bitcoin per share, BPS, a bold move that reimagines how investors think about equity. In 2025 alone, BPS jumped by 39,716 satoshis. Since 2020, that figure totals 198,543 satoshis per share. In Saylor's world, earnings matter less than how much Bitcoin your stock actually represents. But it's not just about accumulating Bitcoin anymore. It's about financial engineering. Saylor has built what he calls a Bitcoin refinery, a system that converts Bitcoin's volatility into structured credit products. STRK offers partial equity upside with a guaranteed yield. STRF acts as senior debt. STRD targets high-yield investors. And STRC, a monthly dividend instrument tied to short-term yield, functioning almost like a Bitcoin-powered savings account.
And the beauty of all these is, do you know what happens when these are essentially debt raises on the company? And what they do with it, look, you can see kind of the market value. This is the money that they raised. They buy more Bitcoin. Michael Saylor, when you talk about an infinite money glitch, he's using Bitcoin reserves to fund and create these financial instruments. So he's draping these financial instruments around Bitcoin reserves. The money raised from these financial instruments go back into this to make the Bitcoin reserve larger and make that yield larger. Now, you might think this is some type of weird circular reference pyramid scheme. You could maybe say that. I think that there's been some accusations like that. But overall, if this reserve continues to go up, or as long as the weight of this reserve is enough to counterbalance any type of softness on this side over here, then things should work out.
Tied to short-term yield, functioning almost like a Bitcoin-powered savings account. This isn't just innovation, it's a direct challenge to traditional finance. These products are over-collateralized well beyond industry norms. STRF and STRC by 10x, STRK by 6x, and STRD by 3x. For comparison, conventional credit markets rarely exceed 2.5x. It's a clear signal that Saylor's aiming for institutional trust, not just retail hype. The ultimate goal? to create a Bitcoin-based yield curve, a full credit ecosystem that could draw in trillions in global capital still untouched by ETFs or legacy instruments. If this actually works, what happens to Bitcoin's price when it's no longer just a store of value, but the backbone of global credit markets? Let's watch more clips from Saylor's session to gain more insight.
So that takes us to MSTR. What is MSTR? It's amplified Bitcoin, right? If you want more Bitcoin, if you want 2x Bitcoin or 3x or 4x the return and 4x the volatility of Bitcoin, you need a Bitcoin-backed equity. And we're aiming this for Magnificent Seven investors that they believe in the digital transformation of capital, right? We aim to be the Amazon of capital markets, right? Completely disrupt the business model. And you can see it in our metrics where, we're running 101% annualized.
God, just drink this in. MicroStrategy is insane. Look at the NAV, 74 billion. Implied volatility, 53%. Options market, 3.1. BSC return, 3,093%. Open interest as a percentage of market cap. That's a fun one. We know what happens there. We've seen it before.
Performance 5 years in a row, right? In 10 days, it'll be 5 years. So doubling every year for 5 years, it's hard to say that's a fluke. And here's another illustration of amplified Bitcoin. You can see, bonds are underperforming, real estate's a 6%er, gold is a 10%er, the S&P is.
That's why I love Michael Saylor, by the way. Look at real estate and look at Bitcoin and MicroStrategy. Real estate, if we're talking about Dave Ramsey, this is something that he loves. Real estate. I mean, I'm not saying I hate real estate. I'm just saying you got to understand. You got to understand what this really looks like.
The cost of capital of 14%. The Mag 7 doubles that. Bitcoin doubles that. We double Bitcoin, right? And you can see in the last year, it's the same exact thing, right? Even more so. So I want to explain how we amplify Bitcoin. Okay, so we start with 199,000 Satoshis a share. And if we have no leverage, if we had no credit strategy, if we couldn't issue credit, then 10 years from now, we've got 199,000 Satoshis a share. That's like an ETF. That's a BTC factor of 1. But if we issue preferred that's equal to 10% of our Bitcoin assets, that's 10% leverage, it turns out that we have 267,000 Satoshis a share at the end of the period because we're not diluting the common stock as rapidly as we're building the Bitcoin. And if we go to 20% leverage, you see you end up with 376,000 Satoshis a share. And now let's go to 30%.
I like this term, intelligent leverage.
So you can see at 30% leverage, we would have 555,000 Satoshis per share. The green bars you see, that is the work that the treasury operation is doing. When people wonder what's the value added of a Bitcoin treasury company, it's the ability to create the green bar over the orange bar. And that's a 2.8 BTC factor. That means that, what does it mean? It means in essence, you would think that the floor for MNAV for a company that's got this sort of performance is 2.8, right? It's not the MNAV, but it's at least the floor. The MNAV of the company should be higher than 2.8. Now let's delve a little bit deeper into this idea. So I'm going to show you what happens as you increase the leverage in a Bitcoin treasury company like ours. You can see if we have 30% leverage and a Bitcoin appreciates at 30% ARR.
This idea of utilizing as a treasury company, the leverage side, this is where things get bananas because banks do this like with impunity. And what Saylor's doing is just doing the exact same thing, but utilizing Bitcoin as the amplifier versus the US dollar.
Over the time period,
a much better asset
you end up with
class.
An amplification of 2.8. You're getting 2.8 the Bitcoin performance, probably 2.8 the Bitcoin volatility, right? And you can see here, as Bitcoin grows faster, the amplification increases. If we hold the leverage constant, but Bitcoin grows at 50%, you're a 4.7 lever. And you can also see that if you hold the growth rate of Bitcoin constant but increase the leverage, like we're growing Bitcoin at 30% a year, but we go to 50% leverage, now we're 7.8 amplified.
I mean, this is crazy. Obviously, I don't think that they're going to be getting to that type of leverage. That type of leverage would be like borderline irresponsible for what's going on at 50% leverage. But this 20 to 30% level, that seems pretty reasonable, depending on what approach they take, and especially if they kind of pour some gasoline on and take it off as Bitcoin changes. And look, the crazy thing is, if Bitcoin's at a 0% ARR, you're still getting multiples on this leverage side. So that's where MicroStrategy, it is definitely a levered bet. We talk about that sometimes with meme coins, but you can get that with MicroStrategy. You can get these levered bets with MicroStrategy. Could you imagine 50% Bitcoin ARR and 50% leverage? Sure.
At a BTC factor of nearly 8, you're getting 8 times the performance of Bitcoin. In the extreme, if you go to 50% leverage and Bitcoin goes on a tear and grows 50%,
That's how I knew he was going there. He's a moon
a year,
boy.
you're getting 22x performance on the equity versus just holding the ETF. Let's take a different slice of this. If I have Bitcoin growing at 30% a year and my credit improves or the interest rates fall, if SOFR falls to 100 basis points and we're able to reduce our dividend rate from 10 to 6, you can see the amplification goes from 2.6 to 3. And you can see that, and then if we consider the next slide, when you actually combine leverage with credit, if you actually get to 50% leverage and you get, and the interest rates fall to 5%, or if your credit spreads compress to 5%, this equity is providing 9.9 times.
This is getting pretty complicated and pretty complex, but I'll summarize some of this near the end of the video, and I'll kind of get some punchlines for you so that you can understand what is happening. Because trust me, I get it. It gets a little bit complex.
So the BTC factor goes almost to 10. So what is the universe of assets that would be interested in MSTR? Well, it's the S&P 500, it's NASDAQ, it's the Mag 7 investors, it's Bitcoin investors. And as you can see, MSTR is outperforming all of those competitors right now. And so if what you want is the Amazon of digital capital.
And real quick, when he's talking Mag 7, so it used to be FANG companies, like that used to be what it kind of referred to. But they've really expanded. So FANG meaning Facebook, Apple, Amazon, Netflix, and Google. That was the 5 in FANG. But now when he's talking Mag 7, this is, it's kind of an update, right? So FANG didn't include NVIDIA and Tesla. But now the Mag 7, it's Alphabet, Amazon, Apple, Meta, Microsoft, NVIDIA, and Tesla. So it includes, and again, Google has just turned into Alphabet in this scenario, but it allows Tesla and NVIDIA to jump in there. Essentially, it's some stocks that have basically carried the U.S. economic growth for the last few years. That's when he says Mag 7, that's what he means.
Then that's strategy. Now, the question in your mind is, can you actually go to 30% leverage or 40 or 50% leverage?
Good
so let's
question.
Look at the credit model.
Good question.
So here we go. This is the existing
obviously. Look at that. Obviously. Easy.
Capital structure, assuming the 40 vol and assuming 0% Bitcoin return.
Saylor says MSTR stock is now amplified Bitcoin, a leveraged way to play Bitcoin's rise. Saylor claims it can offer 2x to 20x Bitcoin's returns through smart, non-debt-based leverage. No interest payments, no maturity risk, just a structured machine riding Bitcoin's momentum. But the market isn't fully convinced, and that leads to the real problem, valuation. Despite massive income and bold innovation, Wall Street still treats MicroStrategy like a risky bet, not the financial juggernaut Saylor believes it is. Now, despite the innovation and record earnings, a valuation gap haunts the stock. With projected $34 billion in operating income and $24 billion in net income this year based on Bitcoin reaching just 150.
Which, by the way, this is not financial advice in any way. they talked about MicroStrategy potentially being added to the S&P 500 based on those new gap accounting regulations. I forget what they called. They called it something, but they basically were allowed to adjust their accounting principles to meet the profitability thresholds to join the S&P 500. Now they haven't joined yet. It's got to go in front of the board, and it doesn't seem like they're going to get it. It seems like some politicking is keeping them out, but this is what you want. You want a delta between what the actual valuation of the stock is and where it is currently trading. We see it all the time. We talked about Tesla in the Mag 7. Tesla trades at a really high P/E ratio, really high, like outrageously high P/E ratio. So what you want are these stocks, MicroStrategy, for example, that Wall Street isn't sold on. If you're right, you're going to make a lot of money because the P/E on MicroStrategy is a financial instrument company, a financial Bitcoin treasury company. There's a huge mismatch. They were talking about it here. Shout out to Curtis in the chat, by the way, saying wag me. GM. We are wag-me-ing right now. We're talking about an extended super cycle and why it may exist. And this is, I think, a really good place to start. So let's just go back a little bit here, talking about, they said it, MicroStrategy is haunted by the fact that Wall Street is not necessarily sold on the fact that they're this financial juggernaut that Michael Saylor is saying.
And record earnings, a valuation gap haunts the stock. With projected $34 billion in operating income and $24 billion in net income this year, based on Bitcoin reaching just $150,000, MicroStrategy would sit comfortably in the top 15 companies in the S&P 500. But its market cap rank? Just 96. The P/E ratio of 4.7x is shockingly low. The S&P average is nearly 24x.
I'm telling you, I did not see this video before. I did not even know this is what they were going to be talking about, but 100%. I've got to do a tweet thread on this video. This video is insane.
Among financial peers or crypto players like Tether, the scale isn't respected. Saylor points out that Tether might earn $12 billion in net income this year. In comparison, MicroStrategy has already gained $13.2 billion from Bitcoin, yet Tether gets more credit from investors. It makes no sense, and Saylor is calling it out. He argues that MSTR deserves a premium, not a discount. Why? Because of the intelligent leverage it uses. Because it dominates the Bitcoin options market, with $100 billion in open interest, 5 times that of Bitcoin itself. Because it's inside major indices, pulling in passive flows. Because it taps into far larger markets. $35 trillion
it wants in the S&P so badly.
In equities, $60 trillion in credit than spot Bitcoin ETFs could ever dream of. The long-term plan is crystal clear. Phase out all convertible debt. Shift entirely to preferred equity backed by massive collateral. STRF and STRC with 10x plus. STRK with 6x plus. STRD with 3x plus. Then, aim to become the largest treasury company in the world, surpassing even Berkshire Hathaway's $348 billion capital base. But here's the real fear. Everything relies on Bitcoin. If Bitcoin crashes or stalls, this entire structure could collapse. The credit instruments depend on Bitcoin's yield. The stock's value hinges on Bitcoin's rise. The valuation argument disappears the moment Bitcoin wobbles. There's no fallback, no diversification.
I mean, look at this like random stock. I'm sorry, This has been a great video. I'm gonna make a tweet thread on it. But like, look, what is this guy doing? Yeah. So as you can see, you know, the price of Bitcoin is, and actually here I have one in my pocket. This is my Bitcoin here. We got a little. Someone's looking at an iPad here. Some type of charts. This guy's asking a question. He asks a question, and the kid just pulls out Bitcoin. That's the answer.
No safety net. This is a one-way bet. And that's the billion-dollar dilemma.
Oh, it's plummeting.
Can a company built entirely on digital gold survive the brutal cycles of crypto markets? Or is this just a high-stakes fantasy waiting to implode? Michael Saylor isn't hedging. He's going all in, rewriting the rules, betting everything on Bitcoin. And for now, the world is watching, nervous, fascinated, and waiting to see whether this bold experiment builds a new Wall Street or...
Oh, no one's nervous. We know where we're going here. I'm gonna go back. I'll just let it play a little bit in the background while I talk and give my thoughts, summarizing at the end. So they did a good job actually really explaining that and summarizing it for us at the end. And essentially what that summary tells us is that when we talk about Bitcoin and we talk about how important Bitcoin is, the reason why it's so important is because it is the foundation of everything. It's the foundation of the crypto credit system. It's the foundation of the crypto financial instruments. This is how they're wrapped up. Now, I know we love meme coins, but the reason why this is so important, especially as it pertains to talking about a crypto super cycle. A crypto super cycle can happen and will happen, assuming companies like MicroStrategy are able to extend and connect those bridge across the bear market. And if they're able to do that, it takes a lot to be able to do that, by the way. But if they're able to do that by bringing more and more money in to buying their assets, their leveraged assets, their levered assets, their financial instruments, and Bitcoin itself, all of a sudden now you could have a real significant break from the historical 4-year cycles that we've seen in crypto. The reason why those existed were really built around the halving, and there's not a mechanism to keep it going. But MicroStrategy, Michael Saylor, ETFs, institutions, they may very well be taking us to that point. They might be taking us to that point now where we are going to break free of those 4-year cycles. So time will tell. But obviously I'm going to be making a thread about this, but it's really interesting to me, how MicroStrategy is attacking this problem and what MicroStrategy is really looking for when it comes to leveraging this massive Bitcoin reserve that they have, divvying it up into different financial instruments, using that money that is raised. They don't want to raise on debt. They want to raise on, equity and financial instruments, putting it back into Bitcoin and seeing where we land. So if you're sitting there and you're in WAGME, shout out Curtis, if you are in there thinking, what does this got to do with my meme coins? Trust me, we all know how it goes. If Bitcoin can hit 150K, if the cycle can extend for 6 months, 9 months, 12 months, it's really beneficial for projects like WAGME when that liquidity starts pouring in and we do get a blow off top of Bitcoin. So that's what I wanted to look at today. I enjoyed the video. I enjoyed everyone kind of hanging out through the whole time. We looked at CoinMarketCap. We looked at some of the memes that were really pumping. We looked at DeFi Llama for a little bit. We had some technical issues in the middle. It was really a love, laugh, cry show. So I appreciate you guys hanging out. And I will definitely be catching you all on the next one. But until then, peace out all.